HPE CEO Antonio Neri is with us to talk about, Antonio, whether you think the street is unlocking sort of the story here on AI.
Well, good morning, Carlos, and thank you for having me today. You know, we had an exceptional quarter, and I think the street is coming to realize that we have a right to play in many aspects of the IT market, and obviously AI has been the leading element of that. But as you said, you know, we had a terrific server performance, but at the company level, we recorded the highest revenue ever in the history of our company with $8.5 billion, up 15% year over year, 9% quarter over quarter. And in that, we recorded $4.7 billion in servers, which included that $1.5 billion. But we did that with discipline, Carl, and we did it with an amazing record performance on profitability. So we delivered $938 million in profit dollars, and that resulted in exceeding our guidance of 58 cents on non-GAAP diluted net earnings per share. We're wrapping a very strong year where free cash flow was also record-breaking. And I will say the reason why this is all happening is because we have innovated throughout the year, and customer loves our innovation across networking, AI, and hybrid cloud, which also had a terrific quarter. And we do that with incredible discipline in delivering, you know, the results both on EPS and free cash flow.
Do you consider the quarterly guide conservative?
You know, I think it's the right guide in the context of the seasonality, Carl, because remember that when we think about that guide, we think about, you know, Q4 tends to be our highest quarter ever through the 4 quarters. And then Q1 tends to go down just for seasonality reasons. But when you look at that, you know, we guided mid-teens, which is very, very high considering, you know, prior Q1s. And we are right in the middle of what the consensus was in terms of EPS. I understand that there is margin improvements quarter over quarter at the company level. So we feel this is the prudent guidance this point in time. And I will say the biggest upside is networking because the market is still in recovery.
The guidance on the revenue growth, Antonio, reflects sequential declines in servers as well as hybrid cloud. And I'm wondering if you can talk us through sort of the breakdown between the AI servers and the traditional servers in the first quarter and what you're seeing for the rest of the year.
Yeah, Melissa, this is, again, I will reiterate, it has to do with the normal, typical seasonality that we expect on the traditional servers. And then on the AI, you know, as we said in my commentary yesterday, we have today more than $3.5 billion in backlog, and more than 1/3 of that is now Blackwell, which obviously will take a little bit of time to convert as we get into 2025. Therefore, we guided the way we guided on servers. But on the other hand, I will say very pleased that we had the 3rd consecutive quarter of double-digit year-over-year orders growth in traditional servers called CPUs. And then on the networking side, you know, we still, through the recovery, we had growth in Q4 again for the 3rd consecutive quarter in areas like SD-WAN, security, data center networking, and the early phases of Wi-Fi 7 refresh. And what I'm excited about that is that we are early in the Wi-Fi 7 refresh, and that will also drag a refresh in the campus switching, because ultimately these new access points need more power, and therefore the switching itself needs to be upgraded because you need more power over Ethernet. So that's why I believe networking will continue its recovery throughout the year. And the reason why you don't see that completely in the revenue is because a lot of the growth we saw in the back half of 2024 has related to subscription, which obviously drives our margins up, but you don't see that immediately in the revenue.